Welcome to Kalkine TV's Property Talk segment, where we bring you esteemed property professionals to share their insights on the surging property market in Sydney. And I'm Sage, as most of you know. Houses are selling at higher prices and in some cases under a month in both Sydney, Melbourne, and even New Zealand. And to help you make sense of the recent sectoral changes, we interview some of the best from the scene to gain more background and potentially help you access passive income streams. So today we're very lucky to have with us Mr Colin Lee, who is a CEO and founder of Inspire Realty in Sydney, as well as a property portfolio mentor. He is the president of the Australian, Malaysian and Singaporean Association, and he was recently interviewed by the ABC. So welcome, Colin.
Thank you, Sage. It's great to be on.
It's a pleasure to meet you. So I'll just give the audience some background about your company before we get started. At Inspire Realty, they are a team of passionate property people and professionals dedicated to strategizing, financing, managing and consolidating your property portfolio, helping you achieve financial well-being and create wealth through property for your brighter and better future together. But enough from me. I'm sure you're waiting to hear from Colin himself. So without keeping you waiting any longer, let's begin our discussion. So Colin, the property space has emerged as a promising investment opportunity in Australia over the last few months on the back of record-breaking housing prices and a better emergence of the economy, better than expected emergence of the economy out of the recession. However, many Aussies still struggle to create wealth through property due to lack of knowledge or inappropriate investment decisions. How does Inspire Realty come into play here, please?
Yeah, thank you for the question, Sage. Just want to repeat what you're saying. There are many Australians that do struggle to create wealth and to build a property portfolio. And I'm going to just break down some key reasons why. And one of the key reasons is because property investment is not easy. I mean, if it's easy, everyone will be jumping on the bandwagon. So it requires a little bit more thought process, a little bit more conviction, a little bit more action, in order for you to maintain motivated and inspired to build wealth through property. So it's not easy. Secondly is what I find a lot of investors try to do, particularly with the newer ones, Sage, is they try and pinpoint the perfect time to purchase. It's always property is too expensive, therefore I can't afford it, and I'm not sure if now is the best time to buy. And then when the property is down, like during the peak of COVID, for example, Sage, I get a lot of some investors, not mine, but would sometimes say, Colin, the prices of the property is gone through the roof. Now it's too expensive. And then when the peak of COVID came on, the property prices dropped and dipped because there's just not a lot of supply out there. The property prices, the market is going down. Therefore, I don't think now is a perfect time to purchase. So it's a lot of this analysis that a new property investor tries to get in and find the perfect time to invest, which invariably it's impossible. I mean, if it is, then we'll all be very, very, very wealthy. So it's not so much about picking the perfect time. I find it's about picking the right property at the right time that fits in within your strategy. There's a saying, it's not about picking the right time. It's not about the timing in property. It's about the time in property. So don't try and pick the right timing. That's another one. And if I may say as well, I meet a lot of young investors, Sage, and a lot of young people know that they're going to end up working 40 plus years in a career, 9 to 5, and I can't tell you how many people that I meet on a day-to-day basis that said, I wish I had learned about property a lot earlier so I can create wealth at the start of my career. So a lot of investors sometimes think it's too late for them. So that's one of the reasons. Not sure if you know, Sage, but there is a ATO stat that's out. I know it's a few years old, but I haven't been able to access the latest statistics. But according to the ATO tax stats, 91%, call it 92% of people in Australia of about 26 million in population do not own an investment property. So that's about 23 million people that have got no investment property outside of their own home, obviously. So that's a significant proportion. And then you look at the breakdown in terms of how many investors own 1 to 2 or 3 or 4 properties. It gets harder as you try and buy more, obviously, because of the lending landscape. But for 1 to 2 properties, you see that there's only just about 2 million people that have got between 1 to 2 investment properties. So that's a very small percentage. That makes up less than 8% of investors. And then by the time you get to your 3 and 4, it's like, it's almost like a very small amount. 0.5% of investors own 3 properties. That's about 120 something thousand people. And by the time you get to 4, it's 82,000, and that's like 0.33% of the population. So bottom line is, it's not easy. 91.5% of people in Australia just do not invest in property, and 90% of Australian investors fail to build their property portfolio past 1 to 2 properties. So it is not easy, but I'm happy to kind of dig a little bit deeper and kind of go into the reasons why it's so difficult, Sage.
Thank you, Colin, for your insights. Those stats are amazing, because it seems like a lot more people are involved in property in Australia. But I understand that mindset and really wanting to achieve it, and it being your number one goal, and perhaps making sacrifices in other parts of your life might help those people to achieve that, the great Aussie dream, in a way.
It is very much so, Sage. Mindset is so important, and I must say, I've learned so much about my mindset, not from myself. I've had mentors. It's funny, Sage. I was talking to a client the other day, and my client's a big health, nerd, if I can call him. He has a personal trainer. He has people that help him to become good at what he does in his field. So we have mentors for sport, we have mentors for business, we have mentors sometimes for relationships. But when it comes to property and finance, it's funny how few of us have a mentor that can help you through the difficult times, but also through, providing the right strategy for property investment. So, but I'm also not talking about just any mentor. Something I've learned, Sage, is the importance of getting the right mentor. And I remember a really good business friend of mine who said, if you're going to get a mentor who's achieved the results that you want to personally achieve, not necessarily in your own industry or field, but imagine trying to talk to a property mentor who has 1 property, and you're trying to build an investment property of 5 properties, and you've already got 2. So, the level of mentoring has to really match up with your dreams and your desires and where you want to go. I find another problem with mindset. You talk about mindset. So many investors, they listen to the wrong people. They listen to naysayers, they listen to negative people, or worse still, they listen to, with due respect to family and friends who have got no investment properties, and they try and learn from someone who's got no wealth or no property portfolio to show for. So just be mindful who you listen to.
Absolutely. Very wise words. Thank you for sharing your insights there. So according to you, what are some of the critical hiccups property investors face? We've just touched on it a little bit. And how does Inspire Realty in particular help in overcoming the same?
Really, really good question. I get asked that very, very often. Let me put it this way, Sage. If you're looking to build a house, okay, hypothetically, if you're looking to build a house, you will normally find a land, and then you'll find a good builder. Maybe you'll find a good architect before you find a builder, but you'll find an architect, you find an engineer, maybe you find a town planner, maybe you find a good builder, maybe an electrician if it's not part of the contract in the building. But you don't just go build a house with no expertise involved. So it is very important, just like property, you got to have a good team around you. It took me many years, for example, to find a really good mortgage broker. And it's not just a mortgage broker that says, Colin, here's your income, here is your assets, here's your liability, here is your expenses, this is how much you could borrow. No, it's a broker that I want to be able to say, hey, broker, properties in the next 5 years, can you tell me what I need to do to get there? Because I run my own business, it's probably a little bit more flexible, but it's just having that mindset of not what I can do now, it's what I need to do moving forward to be able to afford to buy, multiple properties, and make sure that, you have the right strategy with the right broker. So that's one thing. You got to have a trustworthy solicitor. Again, it's taken me many years to work out the terrible ones to get to the good ones, because by the time, and I don't mind disclosing, Sage, I've got 7 properties.
Okay.
And when you have 7 properties, you have a fairly large asset base that you need to protect, and you need a really good lawyer. So unfortunately, I've been through a handful of lawyers that, quite frankly, just wasn't what I need. And certainly right now, I'm considered a little bit more sophisticated. So I need a good lawyer to protect my asset and to look after my my wealth portfolio. Obviously, you need a good accountant. Again, I've gone through not too many. Luckily, it's the second accountant I've engaged, and I'm still using that same accountant, maybe even a financial planner. So there are a lot of these hiccups, which if you don't put in place in the beginning, you're going to have a lot of hiccups. The other thing is, I just find in my day-to-day conversations, I was talking to a client the other day, and I said, well, do you know your numbers? Do you know how much your current cash flow is looking like? Do you know what your income is to the exact dollar? How much taxes are you paying on it? What your asset position is. So a lot of them don't realize that having shares and your super and all that, it's still part of your asset base. But do you know exactly how much is in your asset base? Do you know what your liability is looking like? Do you know what your expenses, how much you spend on a month-to-month basis? Because invariably that affects your borrowing capacity. So another hiccup, they just don't have the bigger picture in mind. So it's happened to me, and I'm the first to admit that I've sold a little bit too early. I bought a property, long story short, I bought a property, just before it picked up in price. I held it on for 10 years. I sold it for more than double its value. I made $700 over $1,000 for that particular property. Back in 2014, that's when I sold it. So even for someone who's a prolific property investor, I still make the mistake of selling too early. Anyway, the regret is, Sage, today that property would have easily made an extra $400,000 if I still held it. So it's not having that long-term mindset, and just I think you can get emotional too easily, too quickly, and selling it at the wrong time. So that's another hiccup. Property is a long-term strategy, like I said, Sage. So it's so important to make sure that you have that long-term mindset, and it's not about the timing in property, but the time in property, like I've mentioned. Another hiccup, I just find that, some property investors think it's all rainbows and sunshine, but investing in property, as you know, Sage, is you got to go through the ups and the downs. You got to take the bad, the ugly, and sometimes the really ugly that comes with it. So not understanding the risk in property investing is a big no-no. I think you've got to, just like investing in anything, you got to understand the risk and what you're going in for. A lot of investors hear really good, property speakers out there. They think, oh, renovation's the way to go. All I say is there's no one strategy that fits all. If you're going to do renovation, for example, and buy an established property, for example, not to say that I'm not advocating that, because out of my 7 properties, 2 of them are established properties and they're doing incredibly well. But I understand the risk and the effort and the time that it's required, and the contingencies I've got to build in terms of costs to be able to look after those established properties. So if you don't know, the cost of holding on to the property and the type of properties you're getting, you got to find the right strategy which fits you. And maybe an established property works for you. Maybe it's a brand new property. So you got to figure out the best way for you. Another hiccup, they don't understand the lending landscape. They just don't know how much it costs overall to invest in property. I sometimes have investors, funny at Sage, they come in and say, oh, Colin, I have $50,000. What can I buy? And then by the time I say, oh, you need to have stamp duty, you need to pay for this and that, oh, all of a sudden they think they can buy a $500,000 property. Now they can buy a $450,000 property. So you got to know your numbers. And I would say that would be the majority of the questions that I get from a lot of investors, and the hiccups that they would potentially get themselves into should they not engage with the right property mentor or strategist.
Mm-hmm. Absolutely. Wow, that was a lot of food for thought, but I can definitely take your drift. And sounds like getting involved in property is not something you can do half-heartedly, and you really have to do your homework.
Yeah.
So, as we know, you are an active property investor, and you've just shared with us some insights on your own portfolio. And you've acquired multi-million-dollar property portfolio with over, close to 7 houses, or exactly 7 houses, across multiple Australian capital cities. So our viewers would love to know the secret, if there is one, to this roaring success.
I was thinking about this question, and Sage, I must say that I can't attribute it to one secret. I don't know if secret is the right word. I think because the reality is there's just a plethora of information on how to be successful as a property investor. So really, I can only share with you and to the viewers just my tips, and just from personally based on my own experience. I qualify though that it's not one size fits all. Just because it's my strategy doesn't mean it's your strategy. So it's very general in nature in terms of what I'm going to be sharing with you today. So one of the things in your question is that I've acquired a multi-million-dollar property portfolio across multiple Australian cities. And one of the things I know is really important, and having said that, Sage, I know of some investors that have made a lot of money purely investing in Sydney alone. So that's worked for them. But don't forget, it sounds great, but because they have the cash flow to be able to manage that, that would be one of the instances why I would say that strategy would work for them. So I say one of the secrets is diversification. Because it's all well and good to say, I want to buy a positively geared property. But the trouble with positively geared property sometimes is it takes a significantly longer time for it to increase in capital value. So you need to buy some negatively geared property as well, which would be on the upside, have a good capital growth, even though you're putting a little bit more cash flow in to sustain the property in the beginning. The bottom line, what I'm trying to say is you've got to have a diversified property approach. Don't just look at one type of property in one city. And the reason is because properties all perform differently at different times. So I know that my Sydney property, for example, in the last, 10 years have done incredibly well. And it's given me a lot of equity. But as you know, Sydney property now is still going up. I think the last CoreLogic data is showing that there's about 1.5% rise in Australian property prices. And I think Sydney is sitting at about 2.4%. So I think it's still continuing to go up. And I just get the feeling that Sydney is going to plateau for a little while because of affordability. When you think about the average median price of a property in Sydney being about 1.1 million, it takes someone to be earning easily about $200,000 to $250,000 to be able to afford that sort of borrowing capacity. Now, just not many people can afford it. So I just think the property prices in Sydney will plateau. And then you got to look at what other states that would increase in value over the next 2 to 5 years. And if you keep investing in Sydney, then you're not going to have a lot of inbuilt equity for you to continue to grow your property portfolio. So it's just having a little bit of a mix of, different cities that you purchase, but definitely buy some house and land packages, and some units as well. I fundamentally believe that house and land packages are the best way to go. And I think particularly because of COVID. And I know this because my wife is an architect, Sage, and she meets clients on a day-to-day basis. And one of the things she hears a lot is that people want space. Gone are the days where people just want a little, 2-bedroom unit for a couple with a kid. Nowadays, a couple with a kid or 2 kids, they want a 3-4 bedroom house. And with COVID, I think it's become a lot more acceptable for people to work from home. So I think living further away has been the norm. There's certainly a lot of properties that I'm selling, that recommending to clients that are 60 kilometers away from, Sydney CBD, and they're going for over $1 million, even 60 kilometers away from the CBD. That's quite a fair distance. That's about an hour and a half drive for most people. But for those sort of properties, they're starting to become a lot more in demand because of the fact that people can work from home sometimes 2 or 3 days a week. So look, long story short, diversify your property portfolio. I've mentioned this before. It is so vitally, it's probably the most important thing, is to make sure that you speak to the right mentor, and a mentor that has achieved the results that you so desire. I mean, if you want to build a sizable property portfolio, interview your property mentor or the property agent or the broker. And I like to ask this question: what's your net asset position at the moment? Not so much how many properties you have, but what's your net asset position? And that gives you a really good idea as to whether they're actually property investors themselves. Do they live and breathe? Are they passionate about property? I don't know if you can tell, Sage, I can talk properties all day. I love property. I'm passionate about property. And you want to find someone who's passionate, because positivity rubs off. I mean, gosh, I wouldn't like to talk to a mentor who's always negative. I want someone who's encouraging, who's motivating, who's inspiring, someone I can look up to and say, gosh, you've got 12 properties. I want to be in that position by the time I retire. That sort of a thing. So making sure you get a good property mentor.
Exactly. And it's not only the mentor, but also, I mean, it's very difficult to get into property these days on your own with such, large borrowing capacities required. And these days, these high loan to value ratios that are being passed through with different schemes as well.
Yes. Yes.
It's making it a bigger commitment for a single person. So I guess you'd want to find someone who's passionate and someone who's mature and got their head on their shoulders to get involved with the property as well.
Sage, if I may say, absolutely, I totally agree with you. The person with the right head and shoulders. What sets me apart, and if I can be so, if you can indulge me for a minute, the reason why my clients love me, and if you check out my website, you look at, I've got 160 plus Google reviews, all of them 5 stars except for 2. So I don't know, you can't keep everybody happy.
No.
But what sets me apart, Sage, and this is just personally, that's what I get feedback from. A lot of my clients say, the reason we like dealing with you is because I have a finance and mortgage broking background. So I don't do all the finances for my clients, but I actually have a financial conversation with them. So I know already from the very beginning how much they could borrow, how far the deposit can go. So to make sure that you kind of work, you can't have property without finance discussion. You can't have, so it kind of works hand in hand. So it's vitally important that you find someone, not to say that you should find a mentor who is a mortgage broker, but you've got to find a mentor who at least knows their numbers,
Yes.
Yeah.
Exactly. Spot on. Knowing your numbers. I heard you said that in your podcast, and it's definitely something that sticks into your mind. Got to know your numbers. Yes.
That's right.
And the property prices are growing at their fastest pace in over 30 years, talking about numbers, increasing in synchrony nationwide. Do you think the Australian property market bubble will pop anytime soon?
I'm going to give you an insight, and this is not something that's original. I always say that property prices will be highly dependent on one key factor, and that is supply and demand. That's it. I mean, if you understand supply and demand, you'll understand whether property prices will pop or will not pop. The reality is this: I don't know. I wish I knew. I mean, I would love to be able to tell the future, but I did not see COVID coming. And a lot of people wouldn't have planned or positioned their property portfolio to manage their risks according to how COVID has transpired across the country. So that's, I wish I can say that it won't pop, but, if the second wave of COVID happens in Australia, or something else happens that's really going to put a handbrake in our property market, then of course, it's going to pop for a little while. But I don't like to use the word pop, because popping means you can't build it back up. I look at it as it's like lungs. You go up and you go down, you go up and you go down. And I think property is a living and breathing thing. But the reality is the supply and demand, because, and then this is just insight from 2 of my really good friends who are migration agents. And one of them works very, very closely with a lot of Indian migrants. And she's telling me that, Colin, as you know, with the situation of COVID in India at the moment, a lot of people now not only wanting to come back to Australia, these are Australian citizens, but we're also talking about Indian citizens who are wanting to migrate to Australia and make Australia home. Even before COVID, there's already a massive demand and supply, influx actually, of Indian applicants to come to Australia. But because of COVID, it's what she's saying to me is there's a backlog now of all these people who are wanting to come to Australia that's stuck at the borders that couldn't come. So the reality is this, the Australian property market has been largely driven by a lot of overseas investors for many years. It was the Chinese, 4 years ago, 5 years ago, that's really driven up the property prices. But we needed that because, these Chinese investors have provided a platform for a lot of the tenants now to be living in a property. Otherwise we've got no properties for tenants. I mean, the shortage of properties in Australia is a pretty serious issue at the moment. So we need the investors, we need the overseas investors locally. I mean, we've got 25, 26 million people in Australia. And as you see, 90 something percent just don't own an investment property. So how do you expect to keep up with the demand? So we do need to rely on our overseas friends to be able to keep up with properties. So I think it's going to plateau for a little while, but I can't promise you, but I would dare say that by the time the international borders open for a lot of these countries, and I'm only talking about India, but I'm the president of the Australian, Malaysian, Singaporean Association. I talk to my community all the time. I know Malaysians, Singaporeans, Indonesians, Filipinos, Vietnamese, people from Hong Kong. I've got a number of clients from Hong Kong who are just waiting at the bits, to come to Australia. So I just feel like, it's going to ebb and flow, and where the demand is going to come from is when the borders open. And look, I don't know when that's going to happen. So far, fortunately, the local market has been keeping the property market steady, and I imagine that to be steady until such a time.
Fantastic. Thank you for your insights. And I suppose with the RBA meeting tomorrow, we'll find out more about what they're planning to do with the interest rates and the monetary policy.
Yeah. Do you want to pick if they're going to hold it or increase it or drop it? What do you think, Sage?
Well, going from what they've been saying over the last couple of months, that they're probably going to keep it where it is for another 2 to 3 years, I'd probably say they'll keep to their word, but who knows?
I tend to agree with you, Sage.
Great. Well, besides the property sector, and you mentioned just then that you were the president of the Australian, Malaysian, Singaporean Association, the travel industry has also been in the limelight over the recent days after the commencement of the trans-Tasman travel bubble. And as a president of the Australian, Malaysian, Singaporean Association, do you think this travel bubble will pave the way for more overseas travel between Australia and Asian countries like Singapore or Malaysia?
Well, I mean, the question is, the travel bubble has kept Australia safe, and I think that's important. I do feel for a lot of our Indian, friends who are Australian citizens that couldn't come home. But there is a reason for the travel bubble. And I was just hearing Maurice Payne today, who was being interviewed. And it's really, the call is to listen to the chief medical officer. So that's one thing. I mean, they understand the impact if they open up the travel bubble to India in terms of what it could do in terms of the COVID situation. I guess I take a different light, from a human rights perspective. I think they are Australian citizens, and can you imagine, Sage, if you're stuck overseas and people around you, I mean, I'm talking hundreds of thousands of people are being infected every day. I think that the last stats today, I think it was 3,500 people have died today in India from COVID. Is it? I mean, so imagine if you're in that situation, Sage, and you're an Australian citizen, you think your Australian government would look after you. So from a human rights perspective, I think there has to be a way. There has to be, and I think if there is a will, there is a way. I mean, if your family's over in India, if you imagine if your mum and dad is there and they're in their 60s and 70s and everyone around them are getting sick and dying and you can't come home, I mean, that's terrible. So I think, I don't know, maybe open up Christmas Island. I mean, it sounds terrible, but open up somewhere that can take these people in, put them in quarantine for until such a time, maybe, give them vaccines until such a time when they're ready to be integrated back into society. So it's not just an economical, importance for us to open up the travel bubble to the Asian countries, but there's family, there's friends, there's business to be done. So I think there just needs to be a plan in place, whatever that is, but there needs to be a well thought out plan, even though, and obviously I understand the risk of it, but I think there is a way to do this. I mean, we have got vaccines sitting apparently unused. So why can't we allocate, a certain proportion of those vaccines for people coming back from overseas? And we're not talking a lot. I think the last stats was only 8,000 citizens are based in India who are wanting to come home. 8,000. I mean, we can't take 8,000 home. Goodness me. I mean, I don't know. I hope this is not a rant. But
No, that's
I'm just passionate about things like that. Yeah.
That's very interesting. I mean, perhaps they haven't looked at all the options available, but from reading reports today, it's apparently also one of the major factors was the stress or the impact it's having on the quarantine system, and the amount of rooms available in hotel quarantine is also affecting
Sure.
the number of flights coming in and out of Australia.
Yeah. And that's fair. I would do it a bit differently, but anyway.
And fair enough, they probably could make more use of Christmas Island. You're probably not wrong there.
Mm.
Recently, New Zealand paused its newly opened travel bubble with Australia following COVID-19 lockdowns in Perth and Peel. And with no end in sight to the pandemic currently, do you think travel bubbles will emerge as a promising solution to revive international travel?
Look, this is a really, really good question, and I can't say I'm able to comment in some level of detail, but it is. I have friends that are in Perth at the moment. I mean, Perth is only 3 hours away from Malaysia, for example, or 5 hours away from Malaysia. So it's a country that's very close to Southeast Asia. And it's really sad that Perth is in this situation, because I think that will stop Singapore potentially opening up its borders to Perth. And so I just think it's very sad that you've got a couple of cases that happen, and then you straight away the automatic response is to close off the international borders. I don't know what the real solution is. I really don't. This is unprecedented in terms of what's happened. But I must say, look, I give credit to the Australian government in managing our COVID cases. We are a very, very lucky and safe country. I have many, many, many friends overseas who, Australia is the talk of the town. They say, I wish we could come to Australia. I'm not sure that the travel bubble will emerge as a promising solution to revive international travel. I think it will be a good start, and I'm sure there'll be a lot of hiccups and kings that you'll have to work through to be able to make sure that it is done in a proper and safe way. But I'd love to see something being done. If travel bubble is the way to go to revive international travel, it is very, 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 very much needed. And I tell you why, Sage, because as humans, we are social beings, and particularly with Asians. And I'm just not speaking on behalf of all my Asian brothers and sisters. We all are filial. We all respect, and we all have this desire to connect, particularly with our family. So I just can't imagine, having family overseas and not being able to see for years. So I think that family connection is very, very important. I guess, Sage, I don't mind sharing. I'm very lucky in the sense I came with my mom, my dad, my younger brother, and my younger sister. I've got a 16-month-old baby now, but she's not met any of my relatives back in Malaysia. My wife is from South Korea. None of our relatives have met my little one. So it's that, it's that close family connection, but just not being able to see relatives. It's really difficult, not just for myself, but I'm sure for a lot of people. So I really hope the things will get better. I'm just praying that COVID will slow down in other countries, but in Australia, let's give credit to our government. They are managing incredibly well, and we should be thankful and grateful for that.
Absolutely. I agree with you. And thank you so much for sharing your own personal story as well. I
Mhm.
think the travel bubble that's opening between Hong Kong and Singapore in a few weeks on 26th of May, that will really either pave the way or put up the barricades to any more further travel
Mhm.
bubbles. Um,
That's right.
yeah, it'll be interesting to see.
Indeed.
Can the Asian travel bubble rejuvenate the Australian tourism bearing the brunt of the international border closures? Do you think it's possible to revive it?
Look, I think it's going to make I think it'll make a significant dent, but I don't think it's going to revive, the economic growth of the travel industry to Australia. Just no way. I mean, we get a lot of friends and family that come from many other countries like US, UK. I don't know when that is going to open. India is certainly not going to open. So you're really talking about Singapore and Hong Kong at the moment. Maybe I don't even know if Taiwan is in that position. I know Japan is not doing well at the moment. So I mean, what's the population of Singapore and Hong Kong? That's going to make a very, very small dent. I don't think it's going to make a big difference in the overall, tourism industry. I think what we need to do is we need to travel interstate. Let's help our brothers and sisters across the different states. Let's travel. I know I've got friends that have been traveling to Tasmania and Perth and Adelaide. I mean, I've been in Australia for 21 years, Sage, and it's funny because I've traveled more overseas than I've ever traveled in Australia until COVID hit.
Yeah.
So when COVID hit, I was traveling I live in Sydney, New South Wales, but I've been to places that I never would have been if it wasn't for COVID. And it's actually beautiful. I mean, I recently came back from, and this is a plug for Gerringong, but my wife and I and our little one went to Gerringong, and I tell you, it was one of the most beautiful places we've been. The beach was beautiful. It was up on the mountains. We went to this beach which connected with a lake, and so we were in this sand dune sort of a position between the lake and the sea, and we sat in there, and it was just so relaxing. And the food and the people. So we never underestimate, I guess, what we have in our own borders.
Exactly. I think what I heard was that Broome was becoming the new Bali. So people were going as close as they could to Bali before they got, trapped.
I've
um,
not been to Broome, so maybe I need to go to Broome, and I'll offer you what I think.
exactly. And I absolutely second that motion. I can't wait to do some interstate traveling myself. Um,
Yes.
yes, I think the government is really helping, and
Mm.
the airline carriers, they're really helping by keeping the prices down as well, so people are motivated to check out some of their own shores.
Yes,
And
indeed.
in your opinion, for the final question, how soon is the Australian travel industry likely to recoup to its pre-pandemic state? I don't know, we've touched on it a little bit already in the discussion, but in the presence
Mhm.
of these travel bubbles, do you think it would be something that would happen by the end of this year, or maybe in a few more years to come?
Oh, I wish I had a crystal ball, Sage. I mean, in the interest of my industry and certainly in my community in the Australian Malaysian Singaporean Association, I really do wish that that we can start to travel again overseas. I mean, I'll be open. I got married, a couple of years ago, and I haven't been to a proper honeymoon yet. So um, we were just putting it off because of the work that I'm involved in. But we said to ourselves, in 2 years, which is now, we're gonna really travel, and so we've saved up for it, and we were going to travel, proper around the world, but we can't do that. So I don't know how long it's going to be. I mean, if I had to pick a date, I'll say maybe 2 to 3 years. I mean, I was reading somewhere that it will take 4 to 5 years for India's 1.3 billion people to get vaccinated. So until such a time, who knows?
Yeah.
Who knows what's going to happen, Sage? I wish I had a crystal ball, but I just think that we can continue to support the country that we live in. Just make sure the economy gets going. Let's go out. I was talking to Victor Dominello the other day, and he's saying, he's come up with all these amazing incentives. I'm sure you're aware of the $25 dining voucher, the dine-in, whatever you call it, but and that's all designed to stimulate the economy. So until such a time, we need to stay together. And we can only be better together. We must, hold each other in our thoughts, in our minds, and, go out and spend money. It's the little cafes that are doing it tough. Maybe go and order a coffee or a sandwich, but there are little things we can do that would help the economy. I can't remember reading where, Sage, but there was a report released on the, I don't know if you know the JobKeeper money that came in for a lot of people. A lot of that money was designed to stimulate the economy, because obviously you're not getting, paid from your employer, but you're still getting paid. But what we found in the report is that a lot of people are keeping that money. This is, I can't remember the stats, but it's staggering. I think something like 75% of that money has not been utilized. So people are saving, and I think that's a good thing, but you got to be mindful. If you don't spend the money, it's not going to go around, and it's a vicious cycle. So money has to flow. Money has to go into the pockets of SMEs, which are really driving the economy of our country. So please go out and spend your money, invest, in the little business that you've been going to, and really help them out.
Absolutely. And that Dine and Discover initiative by the New South Wales government, that is quite a lot of fun, actually. And you can apply for those online with your Service New South Wales app. And I think they have another one coming out soon where you get $100 to spend at hotels midweek. So that will be, that's something to look forward to as well.
Indeed.
Well, thank you so much for your time. What a fabulous show today, Colin. It was a pleasure to discuss more with you. And I believe your website is inspirerealty.com, which has some valuable information in the way of podcasts and articles to help develop and plan for people's next home purchase. Is that correct?
That's right, Sage. Thank you. It's such a pleasure chatting with you as well. And I hope to come on a future episode if given the opportunity.
Yes, that I don't see why that would be a problem. Was there any last words you'd like to share with our audience here before we sign off?
Well, I just think, it is very important to think about your future. Don't leave it to the last minute. Too many people leave it too late. I mean, it's never too late, but the reality is you're not taken very kindly with the lenders when you're in your 50s and 60s. I think the reality is most people can't afford to retire. There's some recent stats out that a male for 40 years of their working life would end up with about $250,000 in their superannuation. And that you get that at 65. And it's terrible, but for women and for females, the average super at the end of their working life is at about 150,000. And the good thing is that we're living longer than ever before. I mean, some stats are showing that Australians are living well into their mid-80s. So if you think about retiring at the age of 65 and living till 85, you've got 20 years of living to do. So think about the 20 years of living to do, living off a superannuation of 250,000. Simple maths will tell you that that's not enough for you to live comfortably. So you need to have another plan. You need to think really a little bit more about what you need to do to help your money work a little bit smarter for you to build a better future together.
Absolutely. Very wise words to finish off there on, Colin. Definitely something to ponder on tonight. And thank you, everyone, for tuning in. Today, we're very lucky to have Mr. Colin Lee, the founder and CEO of Inspire Realty, with us. And stay tuned for more property talks and our new segment on crypto talks as well by Kalkine TV. And as we say here, stay apprised and invest wise with Kalkine. Watch this space.